Hello, everyone. Welcome to today's webinar with me, Fawad, Razaqzada, market analyst with Think Markets. So the markets have been very volatile of late, as you all know. It's all to do with the situation in Ukraine. And the latest situation is that Russia has ordered its troops into two um, Russian-backed, controlled regions in Ukraine. One is Donetsk, and the other one is Luhansk, if I'm pronouncing it properly. Anyway, that has caused markets to turn very volatile. We saw index futures drop sharply overnight before a big rebound this morning. Gold has been all over the place as well. And we'll share the charts with you guys in a minute or so. But first, let's quickly go through the risk warning. And these webinars are for general information only and are not intended to provide trading or investment advice or personal recommendations. Any information relating to past performance of an investment does not necessarily guarantee future performance. Think Markets shall not be responsible for any losses that you incur, either directly or indirectly, arising from any investment based on any information in this webinar. Please remember that spread betting and trading CFDs carry significant risks and may not be suitable for all investors. Right. So those of you who are joining us live, please make sure you ask us lots of questions in this webinar. For those of you watching a recording of this, consider joining us live next time so that you get the chance to ask us questions as and when we share the charts that you guys are interested in. So for those of you who are new, just a quick reminder that this webinar happens every Tuesday, 11:30 London time. And it's a more technically focused webinar, but we do touch on the fundamentals as well. Let's get straight to it then. And I'm gonna maybe gonna start with the German DAX index, which is this one right here. So as you can see, we have seen the markets break down over the last several days. Sorry guys, just give me 1 second. Sorry about that. Yeah. So the markets have broken down in recent days, not just the German DAX, but across the board. If you look at US indices, other European indices, they've all broken down. This morning, though, as you can see, there's been a sharp recovery as the buyers have stepped in because of the fact that the markets have got cheap. Also because the situation in Ukraine means that the economy could get ahead, the global economy, not least because of rising oil prices. Let me just show you oil prices very briefly. And yeah, Brent reached 99. Yeah, it went past 99 before pulling back a little bit. So oil prices are going to weigh further on consumer spending. It's directly hurting consumers' pockets because inflation is already very high across the world. But with oil prices rising further because of the Ukrainian situation, it means that the consumers' disposable incomes are going to suffer even further. So that could mean, therefore, that spending is going to fall in the coming months if the situation deteriorates further and if oil prices remain elevated. And that in turn could hurt the economic recovery, just as major economies are opening their borders to travel and tourism now that the coronavirus situation has calmed down a little bit. But let's go back to the DAX and talk about this market. And so the reason why we're seeing the bounce is because of the possibility that central banks like the ECB are going to now potentially delay tightening their belts a little bit, or maybe tighten a little bit less than was previously the case. Let's have a look at the bond yields just while we're talking about this. I have no idea where they're trading at the moment. So Yeah, you can see a small pullback in bond yields over the last couple of days. Not a significant pullback, but a pullback nonetheless. In the US, the 10-year has fallen below the 2% once again. Remember when it crossed the 2% level and everyone was talking about how high it can go? Well, the recent situation has caused us to come back down a little bit. Likewise, in Germany, we've gone back below the 2019 high, which is somewhere here. And testing the 21-day exponential. It's still an uptrend, but not as strong as before. But anyway.
Hi, Fawad. I'm back.
Oh, hi, Victor.
Yeah, sorry about the delay in joining you guys.
No worries at all. Good to have you, mate. How have you been?
Yeah, very good. I was just thinking this morning that it's probably a great time to buy stocks because after all the noise about an imminent war and crazy aggression, we got a nothing burger.
Yeah.
The only change that we observe before, say, 2 months and now is that the Russian forces that are already in DPR and LPR are well marked. They have their own uniforms now.
Yeah.
Comfortably wearing them officially. Intruding in other countries' businesses.
Right.
That's how it's been for a while in that region of the world. So
yeah,
the market appears to be pricing in release of tensions.
Yeah.
Because we didn't have this massive aggression that U.S. intelligence was telegraphing over recent weeks.
Maybe the situation could get worse in terms of sanctions and everything else. So perhaps we are not out of the woods just yet. But the
that's
rebound,
for those traders that are trading the Russian ruble or Russian stocks, which I don't think our listeners are.
Talking about the Russian ruble, let's have a very quick look at it. If I can find it.
It's holding in.
It's gone down. You can see that the risk on has caused this ruble to strengthen again a little bit. Yeah.
Boosted it this morning, and we were yet to see how this concludes. But some really key levels on the weekly charts have been tested, and so far we don't have a breakout, which is which is normal considering how high oil prices are. I would have to say here.
Yeah, so a higher oil price, for those of you who are perhaps not so familiar with the Russian economy, higher oil prices, or energy prices, I should say in general, because they produce gas as well, is typically good news for Russia and other oil-producing nations. And this is reflected in their currency holding its own relatively well, considering everything that's happening in the economy right now. If it wasn't for oil prices, I would have imagined we would be talking about 90, level for the dollar ruble. But at the moment, we're below 80, 79.45 as we speak. That doesn't mean that this thing cannot break out as the ruble potentially weakens on the back of economic sanctions that are undoubtedly going to be levied on Russia. And already, I think the UK Prime Minister, if you can see from the BBC website, there's going to be a barrage of sanctions over the escalation of the crisis there, says Boris Johnson of the UK Prime Minister. And I think similar warnings are going to be heard today, and whether or not they will follow through, that's another matter. And it could be that the situation could calm back down. Who knows? But right now, I think that there is still a risk that that things could get worse before they can get better. So while we haven't seen that breakout, as you mentioned, Victor, There's still the potential
Well,
for
we
it to
haven't
happen.
seen a breakout here. We did see a breakout in the DAX yesterday. Let's return to the indices and
Yeah, sure.
have a look at that chart of the DAX,
Yeah,
which was
right here.
looking
Yeah,
pretty dramatic
yeah,
yesterday.
yeah.
The main question today for me is whether we're going to retest and close back above
Right.
14,800 and 30.50,
This
something like
area.
that.
Yeah.
Yeah, we badly need to close the week above that level if bulls are to contain this sharp breakdown in
Yeah.
the DAX, which we witnessed yesterday.
Mm-hmm. So the way I see it, I think I've got a very similar view to you. Right now, this breakdown is going to, well, it's really significant, isn't it? And, not just from a technical point of view, but if you look at what's happening in the fundamental, macro backdrop as well, the timing of everything, this is a clear blow to the stock market bulls, right? So they will need to reclaim this area and reclaim it very quickly if we are to see the resumption of the bullish trend. So for as long as we
Yeah,
remain below this area, I think it makes sense to actively look for bearish trades, selling trades rather than buying the dips and whatnot. Yes, you might get opportunities to buy the index or stocks in this index after sharp breakdowns. But if you zoom into the hourly now, you can see that there are structures within this breakdown. Let's go down to 15 minutes that could act as resistance. And one particular area that I was looking at earlier is this zone right here. Um, this is on the 15-minute time frame now. This was the last kind of attempt from the bulls to rally, break above this high, which failed as it retested this gray area. So we've already retested that zone that I showed you on the daily chart over here. It's possible that we may see another retest of the zone, but this blue area is now where the sellers will need to step in if this thing is going to go lower, because this zone right here, it was the last kind of supply zone, if you like, before the market broke down. We're retesting that zone now. So I wouldn't be surprised if the market started to break down from here, or the DAX in this case, and we see renewed weakness come into play. Yeah, so this is going to be very important area to defend from a bearish point of view. But if we go above it, then that would give us the first kind of green signal, if you like. But obviously, on the daily, we'll need to see the breakdown of that aforementioned area. So it's all up in the air right now. It's very difficult to trade this market. It's very headline driven, highly volatile, no clear, well, on the daily time frame, the trend is clearly bearish right now, right? So if you're bullish on this market, just wait for the right signals now, because so far we haven't had a clear signal to suggest that the market has bottomed out. Yes, we have bounced back really strongly, but yeah, we need to see that closing break, as Victor mentioned, above that shaded region.
yeah. The key news item to watch actually for today, if I may interject here, it's related to the specified borders of the DPR and the LPR, which the Russian government recognizes, because for now there's been some conflicting information. Russian government sources have been saying that they're recognizing the current borders, and the leaders of the republics themselves are claiming other borders that of territories that are still not included in the current separatist controlled regions. So
Right.
that could be a bummer if they decide that they want to include these territories.
Right.
Do I expect that to happen? No, not really. I feel like Russian authorities have enough headaches on their heads, and they wouldn't risk an outright war. As it currently stands, the situation seems to be definitely interpreted by the market as a much better outcome than feared.
Right.
You can see this across the spectrum. Stocks are rising,
Yeah.
risk currencies are rising, and last but not least, precious
Bitcoin.
metals are dropping.
Precious metals. Yes. I thought you was going to say that cryptos are on the rise as well. Which they
Oh
might be.
yeah,
Have
well,
another look. But yeah, gold has dropped, as you can see, after its breakout,
yeah.
as Victor mentioned just now. Do you reckon that this is potentially a near-term top, or a mere pause before we see further gains for gold?
I think so. Yeah, I think that the recent rally in gold has been purely, well, war-driven.
Mm-hmm.
And now that war appears to be averted, we might see a full reversal. And also, like, let's not forget that this issue still stands. I mean, as I mentioned, it will be key to hear what Russian authorities have to officially confirm about the borders of
Yeah.
these regions. So let's wait and see another couple of hours before,
Yeah.
yeah, before getting confirmation from a fundamental point of view. That is, how does it look from a technical point of view? Is it a double top around 1900?
Um, in a way, it
Too
is.
early to say.
It's too early to say. I always hesitate when it comes to bottom and tops. Because they're not the strongest signals you normally get in technical analysis point of view. I normally wait until you see a confirmed breakdown before declaring the trend is over. Could be that, this could be the start of it. The bulls clearly have to be very careful here, right? Because this thing could break down and go. But what I would say though is that look how long it took for the market to decide on a break on the direction of the breakout, which was a bullish breakout, right? So we established a base for several months, a year even, in consolidation before breaking higher. So clearly there was an element of haven flows regarding the Russian-Ukraine situation in this breakout, but it's not everything. We there are other macro reasons why we didn't see a breakdown rather than a breakout. So you just have to take any short-term bearish technical-looking pictures with a pinch of salt, and treat it with caution, because this could be a false signal to get the bears excited again before we see another rally. So I would be very hesitant to call this the top yet, even if it may appear that way, because we are seeing stock markets bouncing back, risk currencies rallying, etc., etc. Yeah, maybe I'm a little bit biased as well, because I own some silver ETFs and whatnot. So I tend to be bullish on the metals normally, as Victor would know. But yeah, just because of the fact that we had spent several months in consolidation, and then we saw this breakout, I think that there's more energy left in this rally to call this a top. It might be a little bit premature, but let's see. Right now, clearly the sellers are winning this battle today, but who is winning the war? It looks like the buyers or the bulls are winning the war. This battle is being lost right now, but let's see what happens later on today or later on in the week.
As you were speaking, we lost another $4, right?
Yeah, it's dropping quite rapidly on the intraday chart. If you look at the 15-minute chart, clear breakdown. On the daily, however, look, there was a risk that it could come all the way to here, to 1875 or 77. Clear breakout level, right? That looks quite, it looks like a gap. So it's possible we may see a more significant drop before potentially we see more gains. But even if it comes down to this level, this does not necessarily mean that the bullish trend is over. It just means that the market is pulling back. So we have to be very careful how we interpret this price action. But clearly, so far in today's session, it's bearish. I'll leave it as that. Let's just see how the daily closes. And also on the daily, if you look on the chart, we have some to deal with at lower levels, including this blue shaded area, which was the prior resistance zone. So even if we see a bearish close today and some further downside follow through to that, this zone could be the area where the bulls might step in. At what point will I say that this market has now has turned bearish? Well, for me, it makes sense to look at price from, and it was right here, this low here, that led to this latest move up, right? So any move back below that level would be my invalidation level. Therefore, there's still some
$40 left.
$40, yeah. That kind of provides a cushion to my still bullish view on gold. But if this level were to be breached at some point later this week, perhaps, then at that point I will turn bearish on gold as well. But
all
for
right.
now,
So shall we have a look at the more the shire precious metal? Silver didn't really break out that much compared to gold.
No,
it held below the 200-day moving average. It briefly touched it today, and that's what it. Yeah, that's what happened basically. We ended up with nothing in the end. At least for now, it appears like a reversal, and the long-term trend lines held rather.
I don't know how to draw this like this or these guys. I don't like trend lines.
A way it isn't broken up.
Yeah. Maybe we should have it like that.
I think so. Yeah. So longer-term trend line, the longer-term trend line on a weekly basis, and the 200-day moving average have served as resistance, and a previous week high again. So seems like bulls need a little bit, not a little bit, but probably quite a lot more new fuel to get over this level.
Indeed.
At least for now.
Yeah. Out of the two metals, I think silver has the potential to outperform gold, I think, if the Ukrainian situation dies down, because silver is also an industrial metal, which tends to do better when risk assets are rallying. So we may see some outperformance from silver. That outperformance may simply mean that it might just struggle to or consolidate in a tight zone while gold sells off. That in itself is outperformance. Doesn't necessarily mean that it will have to break out, or it could break out faster than gold. if the Ukrainian situation eases a little bit. Right now, it's all about the 200-day moving average on silver. A closing break, I would imagine, would be a bullish signal, wouldn't it, Victor? Because if you look at the candles in recent times, we've tested the 200-day on several occasions, but we haven't closed above the 200-day. So a daily closing break would be bullish in my view.
Sure. That said, we would need another trigger. I feel, and I feel like the market is going to focus once again on the imminent rate hike cycle that starts in the US in about a month from now. So let's see whether this Ukrainian situation will be buried by the market, and we can just move on with good old economic news.
Talking of interest rate hikes, well, look at this, a nice rebound for bond yields. Another reason why gold is struggling today, by the way. But massive recovery in the 10-year US yields after being read earlier. Printing a hammer, which is uncompleted, obviously, because the day hasn't ended. But this is clearly a bullish signal for bond yields and for those rate hike expectations that Victor mentioned. Maybe that's something that could come back
to...
Well, go on, sorry.
Yeah, I would have expected the dollar to be doing better today, but it isn't. So far, it has been under pressure, and we have seen the euro rally this morning quite strongly.
Sorry, let me just so risk currencies like New Zealand dollar is leading the gains in majors. The euro is also gaining, but look at the dollar yen though. The dollar yen is higher, so again this is a risk on response, isn't it? It's not
and curiously the British pound is getting hammered, so I can imagine that the recent rally that we've seen has a lot to do with safe haven flows from Europe,
possibly.
As you see, the euro pound, it's up 0.67%, which is quite a big rally for the euro here.
Right.
Definitely, there's definitely also the euro Swiss. If you have a look at that, next another 0.65%. So you definitely have had these flows out of the euro. Over recent weeks due to the tensions in Ukraine.
Right.
So,
okay. So first off of the day, if you look at the Asian session, it was all about the sellers, or it was bearish for risk assets. When the European markets opened until now, it's all been about buying those dips, and the bulls have come out on top. Are we going to see another turn in the things when Wall Street opens later on? That's the key question. And what do you reckon about the US stock markets as we shift our focus to US markets now, Victor? Because in the US, it's been all about the technology stocks selling off. In a way. Sorry, I was just going to say that in a way that the Nasdaq has reached its near-term target. We've broken the January's low, as we had previously indicated.
That's precisely what happened this early morning. The January low was probed in the futures market, and I don't. To be honest, I don't think that the current fundamental news backdrop is favoring a retest of that low. I would be buying dips in the Nasdaq and in the other US indices. If you look at the S&P 500, it's also at a similar key junction. It did touch
This
that
level
trend
right here.
line that you have, that you have highlighted already, and it's picking up. I haven't looked at the Dow Jones. Do we have the same situation there? No, it's lower. Just
No,
yeah.
it's it's.
Yeah, if you look at this chart, it's pretty similar to the previous
S&P.
one with the S&P 500. We've reached this bottom of the range, and bargain hunters should be stepping in here, I feel.
As they have already, yeah.
Considering the fact that, in my view, at least, the Fed hiking cycle has been more or less priced in, no?
I would worry though, because
there is always a reason to worry. Don't get me wrong.
This area has been tested several times in the past. And the more you test the level, the more likely it is that we'll see an eventual breakdown, as we saw in the DAX earlier. And one particular US index that has broken down after retesting a particular support area is the Russell 2000 index. Look at this shaded blue area. Several tests of this level. Eventually, it broke down, retested it from underneath. It held once here and again here before selling off. So if the Russell is anything to go by, are we going to see similar price action in the S&P 500 and in the Dow Jones indices? Because both of these indices are testing a similar support region and bouncing on several occasions. Are we going to see a more decisive breakdown like the one we saw on the Russell? That's my worry if I was a bullish speculator here. I think with the Fed tightening and everything else going on around the world, I wouldn't rule out the possibility of a sharp breakdown. Even though we've bounced. Look, we bounced before, and the market went on to rally for several days. Essentially, though, that last rebound recovery attempt failed to hold above the 200-day moving average. So I reckon we are still in a market that is making lower highs and lower lows. Therefore, I would treat today's rebound with care. I wouldn't necessarily say that this is the stock markets have bottomed out decisively. While that may be the case, we'll only find out in hindsight, right? And we will need to see further evidence of a strong bullish reversal. So, for example, in this case, I would turn decisively bullish if the market, if the S&P 500 in this case, were to break above the most recent high, which is here. That would also reclaim the 200-day moving average. That would be a clear bullish signal for me if the S&P 500 were to go on in the next few days or so to break above that high. Until that happens, I would be very hesitant to call this a reversal. Indeed, if anything, we are testing resistance or potential resistance right here. This level was the most recent support that broke down a few days ago. We retested this level yesterday and we sold off. We are retesting it again today. So, things could change later on in the day. Just be careful. If you're chasing the market, we've already seen a massive bounce. S&P is up something like 50 points, which is like 500 normal pips, right? In other indices, off its lows. So it's already had a sizable recovery, which means that the risks may now be skewed to the downside once again.
Actually, 60.
60. There you go.
Yeah.
Massive. That's a massive move for the S&P 500. I know you can't tell from this chart because in recent weeks, volatility has been quite significant, right? Very high
Yeah.
volatile times.
We also
Yeah,
need to take into account here something though, that this is purely futures trading, and the
yeah,
stock market was closed yesterday
yeah,
in the US.
yeah.
So
Indeed.
basically, the traders are about to return to the levels last seen on Friday.
Which was here.
So
Yeah.
yes.
So speaking of which,
This drop is not that um, you know not that significant, purely
yeah,
because the market was never open, and we have
indeed.
never seen some real volume flowing.
So today we're gonna see some volume come in because of the fact that the market was closed yesterday. Or the cash
Yeah.
market was closed yesterday, we should say. And this particular level was the closing level on Friday in blue. And we've tested that level just now. Let's see what happens there, because obviously over the last 2 or 3 days, including the weekend, we had a sharp deterioration in the situation in Ukraine. How are US investors going to react to that remains to be seen. We've also had a few data releases here and there, but obviously right now it's all about Ukraine. So today, it will be the first time US cash equity investors are going to react or respond to the situation in Ukraine. And are they going to sell into this rebound is the key question. So, Victor, are there any other markets you are interested in this morning or afternoon, I should say?
So the next market I would look at is probably the cryptocurrency market.
Yeah.
You have mentioned it already. Oh, did we talk about oil?
Oh, we didn't. No, did we? We briefly
Oh
touched
no,
on it.
that's an important one.
Yeah.
Yeah. So yeah, oil markets almost. The Brent type of crude oil almost hit 100 this morning.
Yeah.
And the spread between Brent and WTI
Look at that.
risen 42% today. How about that?
$1.32. That's huge, isn't it? Clearly, suggesting that there will be sanctions
the stress is outside of the US.
Yeah, the sanctions on Russia would mean that supply of Brent oil will.
I wouldn't put it on sanctions, because energy sanctions against Russia are pretty much out of the question. That's like Europe deciding to stop its economy today, and that's it.
Yeah.
So it's not going to happen. It's never been on the table. So we've seen pretty moderate discussions about individuals involved with DPR and LPR. The sanctions list is to be announced later today. But as usual, I would imagine it's more talk than walk.
Yeah.
And last time it happened with Russia, it was pretty much the same. The West, after the annexation of Crimea, the West really wanted to show Russia a lesson. However, its geopolitical position doesn't allow it to significantly harm the Russian economy, because it's purely dependent on imports of Russian energy. At least that's the case with Europe.
This is what was said earlier. I just copied it.
Oh yeah. Well, the fact that Nord Stream 2 certification is not going to happen is not really going to change the picture of the natural gas market and energy market in Europe, because simply up until now, since this pipeline has never been opened,
Yeah.
Crude oil and natural gas have been flowing into Europe via Belarus and via Ukraine.
Yeah.
Apparently, this is going to just continue at this point in time.
Right. What about
So
WTI?
yeah, anyway, WTI did test a high this morning. It failed to hold above, and as the news started to flow
Yeah.
in that Russians are discussing what are the borders they're going to recognize going to be of
Yeah.
these two separatist regions. Oil started to reverse lower, and
Right.
stocks started to tick higher. And yeah, so that's another risk play here.
Yeah.
It's basically the same trade all over. Over and over again. The market is so headlines driven
Yeah.
that it's very hard to keep track. So let's go to the cryptocurrency world.
Sure. And we'll start off with by looking at the chart of Bitcoin. And Bitcoin yesterday reached a key level of support. It bounced there, but then it was sold, but then it rebounded again today. So what level am I talking about? Well, if you forget what's happened in recent days, a few weeks ago, there was this bearish trend line in place, right? Let me just show you on a cleaner chart. Let's go to the daily. So this is the daily chart of Bitcoin, yeah? So at the start of this month, we had broken above this bearish trend line. This kind of ended the bear trend that had been in place since November. Once
so we're now at the base of it.
Indeed. So now we are at the base of that, and right here is where that breakout happened, right? Around this area. This is where the bulls need to step up and defend this support area if they are to see higher prices. They're not doing a very good job of that because they attempted to push the market higher, but that was reversed right at resistance here at 40, just below 40. But they're having another attempt today, and we haven't really broken the low of that candle that led to that breakout. So there is still a glimmer of hope for the bulls. What's more, there's the Fibonacci confluence there as well. If you plot your fibs from this low to the most recent high, you can see that the 61.8, the area between 61.8 to 78.6 is there or thereabouts. Usually, after the market ends its existing trend, usually, but not always, it reverses to the 61.8 to 78.6% Fibonacci levels before staging another impulsive move. So this was the impulsive move up. Then we have the corrective phase or wave, whatever you call it. Are we going to see the next impulsive move from here and a rally above 40,000? This is what I'm interested in seeing next for Bitcoin. But rather than preempting it, I'd rather see evidence of the buyers stepping in. And specifically, this is where I would be bullish on Bitcoin again, above 40,000, because that would take us above the most recent thrust candle that led to this latest move down. Right. So if all of the 2-day losses that we've seen in this phase ends and we move above 40,000, then that would create a V-shaped recovery, which is what I would like to see for the bulls to, which is what I would like to see as a sign that the buyers have indeed stepped in. And at that point, I would be looking at higher prices. So that's the bullish scenario. It's not necessarily going to happen, but if it does happen, it could happen something like this. So let's see if it plays out like that.
Right.
What do you think, Victor? I know you're bearish on cryptos as an asset
I'm
class.
particularly bearish on cryptos after finding out, well, since you know, I'm a Russian speaker,
Right.
but so I've been following the news firsthand around DNR and LNR. We just
Right.
actually have got a headline from
Okay.
Russian media that Russia so far does not intend to massively enter the territory of the L the LDR and
Okay.
the DPR. So the LPR and DPR, yeah, I'm just the abbreviations are different in Russian. So anyway,
Right.
I heard that a lot of Russian billionaires are holding a lot of cryptos.
Right.
And I wonder if sanctions and expanded sanctions list against certain individuals is included, whether that is not going to be, hampered by the fact that these people own cryptos and they cannot sanction them really. And second of all, how will the US and obviously European governments look at the crypto market as a whole, considering the fact that Russia might be doing Russian individuals and
government
individuals in power could be doing some shenanigans to go around the sanctions via crypto.
Sure.
So yeah, that's something to think about if you are really keen in buying cryptos.
Yeah. The flip side of that, I would say, is energy prices increasing the cost of mining of Bitcoin and other cryptocurrencies.
Well, yeah, I think that actually that this is also pretty negative for crypto. It's not really the flip side. It's even worse because if you're a government and you spot these miners that are eating away electricity while other productive industries are unable to function, what are you going to do?
Yeah, that's a good point as well. So I think there's lots happening from a macro point of view that could impact cryptocurrencies in a meaningful way. Best thing to do, I think, is watch price action and respond in the way that the market tells you that it wants to head towards. So right now, the bulls are putting in a fight here, putting up a fight, desperately trying to defend this key support area. For as long as that holds, there's hope that Bitcoin will turn positive and go on to break higher. If that shaded region breaks down, then I think we could be headed a lot lower from here. And the possibility of returning to 30,000 would become very strong at that point. 30,000 is the next psychologically important level. In addition, it kind of marks these lows here. So that's the next key area of support. Will we get there?
Right. Well, yeah, will we get there? We don't know.
We don't know.
As to the current status of the crypto market, as we have repeatedly stated, it has turned into something like risk assets, the risk asset of risk assets.
Yeah.
So as long as stocks keep on rallying, crypto could crawl back some ground. What makes me really worried about crypto bulls, though, is the fact that while at the time when the Nasdaq rallies 2%, crypto rallies 5%, and today it rallies 2%. So
yeah,
let's
there's
see.
clearly a bit of a disparity there. Yeah,
There is a disparity. Yeah,
yeah,
when it's dropping more, and when it's rallying less.
yeah.
And it has been like this since November. So something's definitely going on in that market, and we might not find out what it has been until after it's too late.
Indeed. So we've covered all the major currencies and indices and Bitcoin as well. We haven't had any questions from our audience today. If you have anything to ask us, this is your chance before we end the webinar. So please write your questions in the questions and answers box. And let me just remind you guys, for those of you who are watching this on YouTube or elsewhere, you can join our next webinar live by going to our website, thinkmarkets.com, go to market analysis and click on the live webinars button here. On that page, you will be able to register for our upcoming webinars. We hope to see you guys in one of our upcoming webinars. I hope you've enjoyed this this analysis with myself, Fawad Razaqzada, and my colleague Victor. And if you did, please like and share, as this will encourage us to produce more content like this. Until next time, take care and have a lovely week.
Thank you. Good luck in your trading and otherwise. Cheers. Bye-bye.
Bye-bye.